So now we'll start with we were discussing about self-employment taxes, right? So what we discussed previously, so we discussed very important topic, which is self-employment taxes calculation, and also FICA taxes calculation we have seen, and also we have seen the social security base limit we have seen. And what is the limit for social security, guys? Anyone remember what is the base limit for
168,600.
168,600.
168,600, which we the maximum amount. So this is for earned income, not for wages, not for this is for earned income. So earned income, which includes wages and self-employment, and also self-employment and also farming income.
Tips.
So farming income. So yeah, tips, everything will comes under wages only. So wages, self-employment, farming income. So for all those earned income, the maximum amount which we need to pay towards uh, you know uh, social security taxes, which is 168,600. So okay, we know we have to pay taxes, that is fine, which is income tax we have to pay. But why we are paying the social security taxes and Medicare taxes? So is there any logic behind paying these taxes? So income tax, definitely we have to pay. We cannot escape from paying income tax. But what about social security tax and Medicare tax? Are we getting anything if we are paying? Like, yeah, see, if we are paying income tax, are we getting any something from government? Definitely we will, because the government, to run the government, government require funds. So how they will, they cannot do the businesses, right? So they can collect only from the public who are earning income. That is why we have to pay income tax. So the government will use the money for uh, road transportation and public facility, all services, and um, all uh, all public services the government will take care. And what about social security and Medicare taxes? Why we are paying these two taxes apart from the income tax? Why we are paying these two taxes?
So that when we will be need like unemployed or when we will need any extra medical help from the government, we can get that.
Great. So usually, this amount, once you retire after 62 years, then you can get this money same like PF, but it is not like kind of PF. We have other retirement plans as well. Let me show you Form 1040. So if you are contributing, then you will get a point. So in the account, in the taxpayer SSN with the SSN number, so you will be having some points. So based on the point, you can get some money from the government. You can see here, social security benefits. You can see this line number 6. So how to get the social security benefits? If you have earned income, so there will be some points. Based on that, you will get benefit out of this. So if you are paying, then only you will get. So that is second like we will discuss that at the time of social security. So Medicare, so this the amount the government use for medical purposes. And uh, and also there is one thing called premium tax. Like I can say health insurance at a marketplace. So there was huge, I think, in the USA, there was huge medical crisis happened. So at that point, many of the people don't have health insurance. So then, to make kind of health scheme, so IRS, the government, Fed government will give some reimbursement. If you purchase any health insurance from marketplace, they will give you a reimbursement. So the reimbursement, they will use the funds from Medicare taxes. So this we have seen in the premium tax credit. Again, we will discuss the same points again. So yeah, and if you know the like links, then these taxes will be, you will enjoy while you are studying. So everything is interlinked only. Now, and yeah, so we have seen social security taxes calculation. So social security income into 92.35 into 15.3. So that is social security taxes. So self-employment taxes. So what is the schedule, guys? Quickly, schedule,
Schedules.
schedule,
Schedule SE.
schedule
SE.
ESE, and also here we
Sched-
can see another schedule,
scheduled 1.
schedule
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 C.
2.
2.
2 for taxes, right? So self-employment taxes, and also deductible part of self-employment, where we can see deductible
Schedule
part
Schedule
1.
of
1.
deductible
2.
part of self-employment taxes. We can see on this schedule
Schedule SE.
ESE,
1.
and also schedule 1 also,
1.
2.
and also self-employed health insurance formula.
SC income minus deductible part of self-employment taxes.
self-employment income minus deductible part of self-employment taxes. So that is the maximum amount where we can contribute towards the self-employment health insurance. So this also we have seen, and now we'll start with uh, another important area, employee compensation and worker classification. So this is very
Um,
important in the paper 1 and 2. The classification of uh, employee compensation and worker classification. So when we will call a person as an employee and when we will call a person as self-employed people. So usually self-employment compensation, let's understand self-employment compensation. So now whatever the amount given by the employer to the employee always comes under wages. So always comes under self-employment compensation. Any amount given by employer to the employee always comes under compensation. So which is employee compensation. So it can be cash or it can be non-cash, anything. So if employer is giving, then it is wages, unless and until it is excluded from the taxes. So we have some few exclusions we can see in the wages. So those are not a compensation, but majority of the incomes given by the it can be monetary or non-monetary will comes under wages, employee compensation only. So first one I can say wages. So this is one example for employee compensation, and also wages I can say salaries, bonus, tips, commission, everything will comes under employee compensation. So bonus and tip income, where we can see tips usually we can see in the service sector, which is hotels or barber saloons, those are the service sectors, right? So there we can see this kind of tip income. So I think for tip in 2025 we have one update on the tip income. So tip, no tax on tip up to 25,000. So this we can see in schedule 1A. So not for 2024 exam. So 2025, I can say 2026 post February, if you are preparing your EA exam paper 1 after 2026 February, then you can see this tip income. So note tax and tip up to 25,000. Again, we have thresholds and all. So for this we have schedule 1A. So we have schedule 1 and we have schedule A separately, but this is something called schedule 1A. So in this tip is one of the item. So there are a couple of items I think 5 items are there. Overtime, if you are doing overtime, then up to 12,500 is not, no tax on overtime OT payment up to 12,500. So those are the changes in 2026 syllabus. So for you, you no need to remember these points. And also uh, yeah, so now let's understand from business point of view, for business and for employee. So this is business point of view in the sense employer point of view. Employer having income of $100,000. This is employer income, and also employee having some expenses. So out of which wages is one of the expenses. So these wages I can say $10,000. So this $10,000 given to employee Mr. X or something. So here Mr. X. Now this is expenses. So while employer paying his income tax, so he will include total income and he will report these wages as expenses. So he will pay tax on 90,000 and employee will pay tax on 10,000. So ultimately the tax, so for one person it is income, another person it might be expenses. So this is the employer point of view, and employee point of view it is income only. So compensation is always taxable. So always taxable. And for this, we can classify these employees or workers into two. One is employee, another one person is employee, another one independent contractor. Why to classify persons into two, employee and independent contractor? So we have certain characteristics of employee and independent contractor. The first one, tax treatment. We'll see what is the tax treatment in case of if the person is employee. Now if the person is employee, first one, federal income tax. Sorry guys, I lost the power. Let me share the screen. Yeah, first one. Can you hear me, guys?
Yes.
Yes,
Hello,
Jay.
you can hear me, right? Okay. So first one, employee. So we'll see from employee point of view. So employee basically, um, here if the person is employee, then he need to pay federal taxes, right? So who will pay federal taxes? Employee need to pay, but on behalf of employee, employer will do some withholding. So then only he will give the balance amount to the taxpayer. So let's say if the person income $100,000, so this $100,000 is his salary. Okay, so will he get whole $100,000 over the period over the 1 year? No, he will not get whole $100,000. So in this, employer will do the calculation how much the employee need to pay income tax for the period. So for that, there is one form called W4 statement. So employer will give the W4 statement to the employee will fill the details, and employer will assess employee income tax. And let's say on the $100,000, let's say taxpayer at 10% slab, like we know the slabs, right? So not slabs, the rates, right? So ordinary income tax rates like 10% we have, 12% 22, 24, 32, 35, 37. Now let's say taxpayer standing at 10% slab. So this is $100,000 into 10%, which is 10,000. So this is the amount the employee need to pay. How employer will do the calculation? So this 10,000 is for whole year. So he will divide it by 12. That means from his paycheck every month he will reduce 833. So let's say his salary $100,000 divided by 12. So 833 is 8,333 salary, and also 833, this is salary, and this is salary, and this is Fed income tax withholding. Federal income tax withholding. So how much he will get net amount? So 8,333 minus 833, which is 7,500 only he will get. Only federal income tax? No. Employer will also withhold FICA taxes. So what is FICA taxes, guys? FICA taxes, which includes social security tax he will withhold, and also Medicare tax also he will withhold. Balance only he will pay. Let's say social security tax, which is around 120, sorry, 120, and here which is $80. Let's example. And now 833 towards income tax, and 120 for social security tax, and 80 for Medicare tax. So that means total withholding, which is 11033. So out of total salary 8,333 minus 1033, so 7,300 only he will get. The balance towards income tax and social security tax and Medicare taxes. So this entire calculation will be done by employer or employee. Employer will do the withholdings. So what are the taxes he will withhold? So first one, federal income tax and social security and Medicare taxes, which is we and also employer also will contribute, right? So employer will contribute half of the FICA taxes, will contribute 50% of the FICA taxes. And also unemployment taxes also we have, which is FUTA tax, like totally FICA taxes and also FUTA taxes, which is unemployment taxes, federal unemployment taxes. So if the person is employee, so this much payroll tax, this much back end the employer need to do. So he need to withhold federal tax, social security taxes, FUTA taxes, and also employer contribution taxes. So classifying employee and independent contractor is very important because of the payroll taxes and unemployment taxes, federal income tax withholding. So now for this entire calculation we have, right? So this calculation after year end, employer will issue one W2 to the employee. So this information, the same information will be given to IRS as well. So due date usually, so we follow calendar year. We know, right? So calendar year which starts from Jan to December. Now, if you talk about 2024, So if the person is employee and if the person worked for Jan to December, then he will get one W2 statement by next year, January 31st, 2025. So before that only he used to get W2. Employer should not delay. If the employer is delaying, then he need to pay penalties. So everything we have those in paper 2 we can see. And also employee will report his W2 in his income tax return. Employee will report W2 in the income tax return. Like in India we have form 16, right? So this form 16 is nothing but in USA, which is W2. How many of you have seen your form 16 guys? Do you know form 16?
Yes, I have seen.
Yeah. So likewise here we have W2 statement. So in the form 16 we have how much total withheld by the I can say TDS withholding by the employer. So well, all the information we can see, right? So same wise here W2 we have. And also this is one employee, and also we have independent contractor. Independent contractor. This is very important. Independent contractor, in this case, in case of independent contractor, do the employer or payer need to do withholding and employer need to pay any FICA taxes or FUTA taxes? So no, a payer no need to do payer no need to do any withholdings. Any withholdings. No need to do any withholdings. If it is I mean federal taxes or FICA taxes or FUTA taxes, no need to do. Only the thing, if the amount more than 600 are equal to more than or equal to 600, then he need to issue one document which is 1099 NEC. So if the person is independent contractor, then we need the payer need to issue 1099 NEC. So that means in this case no payroll taxes, so no FICA taxes, FOTA taxes, and income tax withholding. So that's the reason classifying a person as employee and contractor is very important. So who in which case employer will pay huge taxes in case of employee or in case of independent contractor. So in which classification employer will get maximum benefit? If the employer, or I can say payer, here we have Mr. X, so who is a payer, and we have employee or one person, we have one person, Mr. Y. So if the Mr. X, who is payer, if the payer classified Mr. Y as employee, so is it benefit to Mr. A or independent contractor? Independent contractor. So which case Mr. X will get maximum benefit? The payer will get maximum
In case
benefit.
of independent contractor, because
Why?
they won't have to pay FICA taxes themselves, the pair,
Okay.
is it?
Okay. So if Mr. X classif can if Mr. X classifies as an employee, then employer responsibility. Let's understand employer responsibilities. He need to pay 50% of the FICA taxes, correct? And also he need to pay FUTA taxes, and also he need to uh, withhold federal income taxes. So these are the additional burden, right? So federal income tax. But if the person classify the recipient as independent contractor, do we need to do all this? Like employer need to do all this? No, not at all required. So which classification will get maximum benefit? Employee, if the person classified as employee or independent contractor?
Independent contractor.
Independent contractor, so that is the best option. So with this reason many of the payer will classify the recipient as independent contractor only. But even if you can see the person as an employee, but still they do consider them as independent contractor. I have seen few cases. So that means IRS had some guidelines. So in which case we can classify the person as employee, and what are the cases we can classify a person as independent contractor. For that we need to understand one I can say key tests. So we have some test for that. So key test, What is the key test? So the key test, basically, general rule IR is saying, if the payer controls only the result, then the person is, if the payer controls if the payer controls only the result, then we will consider, or we will classify the person as independent contractor. So if the payer controls only the result, then independent contractor. Like, let's say you had some health issue, and you approach to a doctor, and will you instruct him to do the kind of tests, and will you instruct him to write the medicines? No, you will not do. So what you will do, you will explain your situation, your health problem, and he will diagnostics everything, and then he will give the treatment. So the final result based on your need, that's it. The process, everything will be done by the other party. So in case of independent contractor, you will just, the payer will control only the result, not the process. So in case of employee, the indicators, employer controls how, when, and where the work is done, everything controlled by the employer. So in case of employee, key points, employee cases, employee indicators, like first one, how and when and where work is done. So if you have these kind of characteristics in the contract or in agreement, then we need to classify the person as employee. Like, let's say you join for a company, and you have to do in specific time, like morning 10 to 8, and also you have to come to office, and everything will be instructed by the employee, everything will be instructed by the I can say payer. So then it is, we have to consider the person, the recipient, as employee only. And with this, we can classify the person as independent contractor or employee. So for this, we have to understand the key test for that. Okay, guys, getting this point? Independent contractors and worker.
Can you explain employee in key test?
Sorry, employee.
Employee in key test. How to determine a person as employee in key
Employee,
test?
yeah. So employer controls how, when, and where work is done. So, and also employer provides tools, trainings, and schedules. Everything will be given by the employer, the payer. So if you have these, indicators in any agreement or any contract, then we will consider the person as employee. So employer will controls how and when and where work is done, then employee. Okay. And independent
Yes,
contractor cases, work controls, the workers basically controls the method and process. So usually in this case, independent contractor use his own tools, so he will not rely on the employer tools. But in case of employee, so the tools, training will be given by the payer. But in case of independent contractor, so the recipient, his own, use his own tools, everything. Guys, getting these points?
yes, Jay.
So it is completely based on level of control. So who controls the ultimate result? So ultimately the result will be, depends on the payer. But how the work process and when and where the work process is done. So if the payer controls these, then we have to classify the person as employee. If the payer don't have any control on how and when and where the work is done, then he is not an employee. He is an independent contractor only. Okay. So this is hot button issue. So every time, even I have seen in current year, I think I have seen 10 these kind of issues. So now understand. So we, with this we understood, for payer point of view, independent contractor is best, right? So payer point of view, if you are a payer, then you definitely will classify the person as independent contractor only. Correct? Independent contractor, because we no need to pay 50% of the FICA taxes. You can escape from paying 50% of the FICA taxes, and you can escape from doing withholding, everything. So for payer point of view, independent contractor benefit. So payee point of view, payee means recipient. So payee point of view, which is benefit. Guys, payee point of view, which classification will get maximum benefit? Employee or independent contractor? Employee, right?
Employee.
Employee, because 50% of the FICA taxes will be contributed by the employer. So that is the best part, right? If you are an employee, 50% of the FICA taxes employer will contribute, and he will do withholding everything. We no need to worry. So classifying a person as employee or independent contractor is very important. So we now, our point of view, employees benefit. Payer point of view, independent contractor is benefit. Let's say the payer, he's actually an employee. Okay, let's say we have Mr. X. So who is actually employee? Who is actually employee? But the payer classified as independent contractor. So is it a problem, contractor? So is there any problem to Mr. X? So Mr. X actually an employee, but the payer classified as an independent contractor. Is it a problem, guys?
Yes,
What is the
Yes.
problem?
because he would be paying FICA taxes the
Yes,
entire
yes.
amount.
So in that case, what he can do, the recipient, he can, firstly he can talk to the payer. So he can ask him, he can ask a payer to, you know, issue W2 instead of 1099 NEC. So first option, we always we can request the payer. If payer is not accepting, then you can, you can you can request IRS to look into the issue. So for that, we had to fill one form, we had to file one form, which is SS8, SS8 for misclassified workers. So in that case, this is very, very important. So definitely you can see a question on this specific area. If a worker received 1099 NEC, but believe he believes that he is an employee, in that case, the first step is to request SS. He can file form SS8. So this is to request IRS determine of worker status. So it is it, it is a request form, which is a request, form to IRS determine of worker status. Now IRS will look into your situation, and if IRS agrees, if IRS also determines the person as employee instead of worker, then if IRS agrees, if IRS determine the person as employee, this is first step. Step 1. So second step, if IRS classifies, if the IRS also consider or classified as an employee, then what we need to do? So in that case, we have to file one form. We have to file form, 8919. We have to file one form 8919. In this case, what employee can do? So he had considered as independent contractor. So that means, did we pay any FICA taxes? No, we haven't paid any FICA taxes, right? So because the payer classified as independent contractor, so no FICA taxes on your paycheck. So we have received the whole amount, and also no federal income tax withholding. So straight away the full amount had been given to the recipient or independent contractor. Now it is your responsibility. So now you have to pay your FICA taxes. So in this case, what we can do, we have to pay only the employee. So the problem is only for the FICA taxes related, right? 50% we need to pay, 50% employer need to pay. In this case, you had been considered as independent contractor instead of employee. In that case, we can request form to the IRS by filing form SS8, and if IRS determining the person as employee, then we can file form 8919, and you can pay only employee FICA taxes only. So you can pay only employee FICA taxes. The employer will automatically will pay. So IRS will, determine, and they will assess, and they will send a bill to the employer, and employer will pay the amount accordingly. Okay. So here employer portion is not, paid by the worker. So one second, guys. Sorry. Yeah. So this is one important area. So in this case, do we need to pay a FICA tax? Do we need to pay whole 100% of the FICA taxes? No, we need to pay only employee FICA taxes. So employer portion, who will pay? Employer will pay automatically. IRS will send a bill to the employer and employer will pay accordingly. This is clear, guys? Yes or no? Anything?
Yes.
Yes, right.
Yes,
So
Yes.
yes, yes.
clear, right?
SS8 form is for independent contractor.
Yeah. So actually, the payer classified the person as independent contractor instead of employee. In that case, we have to do this process.
Okay.
So Form 891 basically shift the payroll taxes responsibility away from the worker. That means 50% of the payroll taxes we need to total 100%, right? So out of which 50% your responsibility and 50% employer responsibility. If you file 18919, so that means it shift the payroll taxes responsibility away from the worker whole 100%, out of which we need to pay only 50%. This is clear?
Uh, sir, like in case of
Hmm?
independent contractor, the employer will pay 50% of FICA tax, isn't it?
Independent contractor cases, no. So you can see here, independent contractor employee only, so we need to pay in case the person is employee, then only employer need to pay 50% of the FICA taxes and FUTA taxes and income taxes. If the person is independent contractor, no other responsibility to the payer. The payer no need to deduct any withholding, no need to pay any FICA taxes, no need to pay any FUTA
Okay,
taxes.
okay,
But
okay.
but in only the case when
Employee.
employer payer need to pay, only in case the person is employee, then only we need to pay all this. We have to think
Okay,
from payer point of view. Okay.
okay, okay. Thank you.
Okay. And now another topic, which is advance wages. So what is the meaning of advance wages, guys? Advance wages means,
The amount for next month is received in the like suppose for this January
hmm,
wages amount like and we are receiving it in December.
okay. So uh, that means any amount received before we perform the services, right? So before
Yes.
performing services, if you receive any amount, so always we will consider as advance wages only. So in case of advance wages, when it will be taxable? In case of advance wages, like let's say, as you said, like we are in December month and this is in 2024, and we have requested to the payer to pay the next month's salary as advance. That means Jan 2025 advance salary we are getting in December 2024 itself. So that means January salary, which is $100,000. So this $100,000 will be taxable in 24 or 25. So if you receive as advance wages,
In December
24.
24 only.
24.
that means 2024. So what is the key factor to consider, to to consider it as income in 2024? The key factor here is income is taxable in the year of actually received or constructively received. So income tax basically it is based on actually received, whether we have received actually or constructively received. So we also have seen constructive received, right? So anyone remember what is constructively received means? We have seen this doctrine, right? So we have seen three types of doctrine. Anyone remember constructively received means?
It means to be considered received without any condition.
Yeah. So if there are no conditions, then it is income immediately. We have to recognize it as income immediately. So the key point here is income is taxable in the year actually received or constructively received. Like in this case, we have received next month advance in the next year advance in the current year. So this will be taxable in the actual. So we have received in 2024. So that means it will be taxable in 2024 itself. Okay. And also repayment of advance wages. So what is the key in this case? Repayment of advance wages. So we have seen this. Anyone remember repayment? Let's say you have in 2024 we received $100,000 income related to 2025. So that means this is advance salary. Like let's say in 2024 we have received advance advance wages. Okay, advance wages of $100,000, and also we have regular wages. We have regular wages which is $900,000. Now in 2024, how much you will report? So we will report only $900,000, or we will include 100,000 as well. So we will include 900 plus
100,000.
100, which is $1 million. This will be taxable in 2024. This is your income. This is in 2024. Now in 2025, we are repaying the advance wages, repaying the advance wages, which is whole $100,000 we are repaying now. And also this is repayment, and also you have regular salary, regular wages of we have regular wages of $900,000. Now tell me how much is your income for 2025? How much you will report? Like you are in the situation, how much you will report?
$900,000.
900,000.
900 minus
10,000. 100,000.
why?
We are repaying in a current year, right?
So yeah, we are repaying. If you include this, then that means you are paying double taxes. So that is not the case, right? So in case of advance wages repayment, what is the treatment? Do we need to amend previously filed tax return 2024? No, not at all.
No.
You no need to do, because uh, uh, so that is not the actual option. So IRS is saying no need to amend your previously filed tax return. So in this case, what we can do, the tax treatment is the repaid amount is deducted from taxable wages at the time of paying the amount. Okay. So in this case, the repaid amount is deducted from taxable wages at the time, and prior year wages are not amended. Like we no need to do any amendment for the same. Okay. This is clear. And for this, do we need to apply the 3000 rule? No, that is different, and repaying advance wages is different. So that is for anyone remember 3000 rule? No one remember. Repayment is more than 3000 or less than 3000, we have seen.
Yeah, we can claim a tax credit or we can deduct
Uh,
it on the same schedule.
Under section
Section I don't remember.
section number not required. So fine, 1341, right? Okay, no worries. So no need to remember the sections and all. Okay, so that is different, and this is something which is repayment of advance wages. So this is different. We no need to apply those options, which is deduction or credit. So if it is less than 3000, so which is either if it is Schedule C, then only we will give the deduction, and if it is other than Schedule C, so we will not give any deduction. IRS will not give any deduction, and no credit as well. That is what we have seen, the previous one and current one. And now what we understood, so in case the person is employee, then in this what is important, 1 second, can anyone summarize what we have seen so far? In this what we have seen, classifying employer versus independent contractor scenario we have seen. And in that case, if misclassification, in that case we can use uh, form SS8 and 8919, and we have to pay only employee portion. And that is what we have seen. And also when we will consider the person as employee, and when we will consider the person as independent contractor, so that is also very important. And also advance wages, so advance wages will be taxable in the year of receipt only. And what we have seen, that's it, right? Yeah, that's it.
Yes.
Okay. So next important one.
So
Yeah,
in case of repayment, we will reduce the amount of repayment from the wages. Suppose repayment
correct.
amount is $100
Hmm?
and the wages amount is $900. So in this case, 900 minus 100, like that
100,
will
correct,
be 800, correct?
correct.
Okay.
So in other case, like repayment is 900 and wages is 100, so then what you will do? So that will not be the case, definitely.
Okay.
So no need to worry on that case. So next one, supplemental wages. So what is supplemental wages in general?
Additional to wages, we
In
get
addition to
any
the
benefits?
regular wages. So apart from the regular wages, what are the supplemental wages we can get from the employer? So where we can see, so
Bonus?
this yeah, so the supplemental
Bonuses.
wages we can see in the W2 itself. So if the person is employee, definitely he will get W2 statement after when. What is the due date for W2? When, what is the maximum due date to the employer to issue W2? Next year, January 31st. So before that only, he need to issue the W2 to the employee. Like Form 16, we used to get the Form 16 to file the tax return, right? So do we have any due date? So basically, employer will prepare the final Q4, Q4 tax return. So then only we will get Form 16. Likewise, here in USA, uh, employers should file their payroll taxes everything before January 31st. So you will be getting employees will be getting the W2s before January 31st only. So the date also important. And also supplement wages. So where we can see the supplemental wages, we can see in the same form W2, and it will
W.
be fully taxable like regular wages only. So there is no special treatment. We have fringe benefits, for that we have special treatment, but for supplemental wages, so this is just like a wages only, taxable. This will be taxable even if the payment is not for what actually work you perform. Like this is additional to the wages. So even though it is not the wages which we are getting apart from the wages, apart from the service we perform, but still it will be taxable. So couple of common examples for supplemental wages, I can say bonus. So bonus, is it your regular wages? No, this we are getting this we are getting other than actual work performance, right? So this is commission will be taxable. And supplemental wages, I can say example, bonus and commission, and also back pays, and also holiday pay, and any prizes or awards, everything will comes under supplemental wages only. And employer duty is to track the supplemental wages. So whenever he is paying any supplemental wages, the employer responsibility is to track the supplemental wages. Why? Because if it is wages, then what are the responsibilities the employer will be having? Income tax, he need to withhold the taxes, right? So withhold the taxes. So that's the reason employer should track all the supplemental wages. Apart regular wages, definitely they will be doing. They will track, but this is not supplemental this is not regular wages. So supplemental wages, but still the employer need to keep the track because of the withholding. And garnished wages. So garnished wages, which is this is also taxable, but when we will say wages as garnished wages, so in case we have an employee here, employee um, supposed to pay in 20, like let's say 2023 tax, he have filed his 2022 tax return, but he hadn't paid any tax due. So he's having due of 100,000 $10,000. And this employee, he's working for uh, big four. Okay, he's working for one big four company, and and he is not paying any his tax liability, which is he's supposed to pay $10,000, but he is not paying still. Now this IRS will give the instruction to the big four company, and this is the example, not only for big four. So this is example purpose. And now this IRS will instruct the big four to withhold some amount and to pay the taxes directly to the IRS. Let's say his income for 2024, which is $100,000. So this is total income, out of which the IRS instructed to withhold 10,000 from the wages and pay only 90,000 to the employee. So this kind of setup we can say, which is garnished wages. So garnished wages, so IRS cannot do directly. For that, they need to get approval from the court. So that means any part of employee wages withheld by the court order because of any part payment, part of an employee wages, part of an employee wages wages is withheld by court order, withheld by court order, then we will consider, we will call it as garnished wages. The reasons I can say back taxes. So these 2022 taxes, right, we call it as back taxes. So not only for back taxes, we can see this kind of, situation in case of child support, which means this we can see in case of divorce cases. So taxpayer the need to pay towards child support and also alimony, everything. So in that case, court will give instructions to the employer to withhold some amount and to pay the amount towards the child support and back taxes and any other legal debt. In these cases, we can see this garnished wages. Now tell me, in this case, this is the income and this is garnished amount, garnished wages. How much this taxpayer will get in net salary? So total income $100,000, out of which garnished wages 10,000. So while preparing his income tax return, how much amount you will report? You are the enrolled agent and taxpayer approach it to you. So how much amount you will report? $100,000 or $90,000? Guys,
$90,000.
90. Okay, I'm getting only an answer. How much you will report? Income 100 and garnished wages 90 and net income, sorry, garnished wages 10 and net income 90. How much you will
We
report
will
as an
report
enrolled agent?
100,000 only.
$100,000 only.
Because those were the income and garnished wages were also earned, so we cannot deduct those.
Why?
Because basically they were also the earned income, so we will report the entire income.
So if court this is the court instruction, right? So if it is not court instruction, definitely you have to pay after some point, right? So that is actually the income earned by you directly. So even though it is garnished wages, so that is not the case when we prepare the total income. When we will calculate total income, we will report the total income. So we no need to deduct any garnished wages. So total, in this case, the total income will be whole $100,000. It can be any reason. It can be for child tax, child support, or back taxes, or any other legal debt. It doesn't matter. Even though it is from court order, also it doesn't matter. That is actually your income, so that you have to pay. And we have seen one more this kind of case. Anyone remember prizes or awards? Declining of prizes and awards. So is that taxable?
Yes,
No, if we have
not
It is not
declined,
taxable.
taxable.
So that is different, and this garnished wages is different. So garnished wages, you actually earned the income. So that in that case, you cannot escape from paying taxes. You have to pay taxes on the same. Okay. So tax treatment for garnished wages, the full amount of gross wages is taxable, even if the employee never receives the garnished portion, but still it is taxable. So that is actually the difference between garnished wages and taxable, prizes and awards. The full amount of gross wages is taxable in case of garnished wages. In case of garnished wages, so what is the important key? The full gross amount will be taxable. This you have to remember. And also some cases, salary means, do we need to get only in form of cash? No, it can be non-cash compensation as also. We will consider it as wages only. So if the taxpayer is getting any property or any other services in lieu of wages, so can we consider it as income? Taxpayer or employee received some property. Employee received
yes, we
one
can.
property for services performed. So for this, he received a property. Is it taxable or not?
Taxable.
Taxable. So taxable under wages. So for wages cases, no matter what, whether it is cash or non-cash, everything will be taxable. Now the property, while we, you know, while employee paying his income tax return, how much he will report? The property value. How much you will consider?
FMV
Fair
of
market
property.
Fair
value.
market value. Fair market value of the property, we have to see the fair market value will be taxable as wages. So property or service in lieu of wages cases. So what is the treatment? The fair market value of the property will be wages for the employee. So this is one more important area. And restricted property. So for this usually restricted property means we have received a property like this is, I can say, RSU, restricted stock units. If you know this we will see later, but for now just see RSU, restricted stock units. So like let's say taxpayer had given you a property, but for the properties there are some restrictions. So now tell me, let's say Mr. X worked for a company which is XYZ LLC, and this XYZ LLC, for the services performed by Mr. X, they have given a property which is land, I can say, land, and he will get complete rights. So this is for tax year. We are in tax year 2024. We are in tax year 2024, and the XYZ LLC had given a property, and X will get the complete rights only after 3 years. So only after 3 years. Then only he will get complete rights. So in this case, when it will be taxable? It will be taxable in 24 or 26? Sorry, 27.
27.
2027.
24.
Because 24 or 27?
27.
Why?
27.
The complete rights is given us to.
For this, we have a doctrine. We have a principle. Anyone remember what is the doctrine here?
Doctrine of constructive
Receipt. Yes.
receipt.
So because to consider it as income, there should not be any restrictions. But here we have a restriction. So until the restriction lapses, you cannot consider it as income. So in this case, what principle or doctrine we follow here? Here we follow the constructive receipt principle. So based on this, in case of restricted property, do we need to consider it as income in the year of receipt? No. Until the restriction lapses, we no need to consider it as income. So this is another important area. And also we have educational related compensation. So that is also income only. Educational related compensation. Colleges usually, some colleges will provide tuition fee reduction or free on campus housing. So if any education providers giving tuition reduction, tuition reduction or any free on campus housing, so in this case when it will be taxable, it will be taxable in exchange of any service. If the provider, if the student provides any services in exchange for this, then only it will be taxable as wages. So in this case, student should provide services. So in that case, yes, it will be taxable. So this is education related compensation. And another case, I can say, yeah, tip. Iris favorite area on paper 1, which is tip income. Tip income. So tip income, it can be cash tip or any charge tip or non-cash tip. So tips we can classify into two. One is cash tip and another one charge tip, and another one non-cash tip. So what is the difference? So cash tip means which is the amount. This is directly cash amount which the service per the taxpayer will get. And charge tip means, have you ever seen this charge tip?
No.
Okay, so charge tip usually I can say okay, let's say you went to a hotel and the bill amount is $1,000, 1,000 rupees, not dollar. Okay, and the bill amount is 1,000 rupees, and will you pay only 1,000? You will get some bill, right? So you have a card only. You don't have any cash with you. Now in that case, what you will do? So you would like to pay 50 rupees extra to the bearer. In that case, how much you will pay? 1000 or 1050? You would like to pay 50 towards tip, and this is your bill. In this case, how you can pay? You don't have cash, only card only you have. In that case, how you will pay? You will use your card to pay total 1050. So in that case, what you will do? You will instruct the restaurant owner, or the biller, to give the $50 50 rupees to the the bearer, right? So that is what we do. So this tip we are getting from the employer. This tip we will get from employer. So this kind of tip we can say charge tip. So if the bearer receive directly from the customer cash tip, so that is directly cash tip. But this is the amount we are not getting from the taxpayer, is not getting from the customer directly. So he is getting this tip amount from the employer and only. So in that case, we call it as charge tip. So it can be cash tip, or it can be charge tip, or it can be non-cash tip as well. So tip can be any form. So cash tip or non-cash or charge tip. So even though it is a tip, tip, tip incomes are taxable, because this is the amount for services we perform, right? So this is always taxable. So do we need to pay income tax on the tip? Yes, it will be taxable. And now the problem is, tip, if the taxpayer is getting tip directly from the customer, this is also wages only. If the person is employee, so then in that case, how the reporting will be done? So reporting will be done based on employee. In this case, employee, what he need to do? He need to report the information to the employer if the tip value 20 or more. Tip income, if tip value more than or equal to 20, then he need to inform. This is per month, per month, per job, per month, per job. More than 20, then in this case, employee need to inform or report to the employer. Why to report? He will include in the wages, and he will do withholding of federal income tax, and also FICA taxes, and also he will pay FUTA taxes. So for that purpose, we employee must report the information to the employer. Employer will do the withholdings. This is clear.
Yes.
And what about less than 20? Do we need to report to the employer? Less
No.
than
No
20,
need to report.
Not
no
the
need to
employer,
report.
but
No need to report. No need to report. But still, I told you, tip incomes
We
are
are
always
taxable to
taxable
pay.
for tip.
Required.
So here, what will happen if we report? So federal withholding, federal and FICA taxes and FUTA taxes. And also less than 20, no need to report. No need to report, but still it will be taxable. If you report, then employer will do all those. So if you don't report, then that means it is subject to only federal federal income tax. Yes, we have to pay. What about FICA taxes? Do we need to pay FICA taxes on the same? No, not at all required. No need to pay any FICA taxes if the amount less than 20. If the amount more than 20, then FICA taxes are mandatory. So less than 20 cases, exempt from FICA taxes, not exempt from income tax. So that you have to remember. Exempt from FICA taxes, but it is no exempt from income tax. Income tax, it is mandatory. And multiple
So,
job roles. Yeah, go
like
ahead.
Jay, so we need to report this $20 under other income in this case.
Yeah, yeah, no, under wages only. So if you can see the form 1040, so there is one line, unreported tip income we have. Unreported.
Okay.
There, unreported means less than 20 cases. Do we need to report to the taxpayer, to the employer? Not at all required, right? So here you can see tip
Okay.
income not reported on line 1A. That means this less than 20, right? So we will report here. Then again, it will be
Okay.
included in the total income. Then it will be taxable.
Okay. Okay, thank you, sir.
Okay. And if you report, then we can see in the line 1A, because employer will do the withholding everything. So we can see in the wages statement, W2 statement. And multiple
Okay.
job rule cases, how the tip will work. Let's say in a month, Mr. X is working with one XYZ pub and another pub, I can say restaurant, Taj Hotel. And from this pub, he he had received $15. He had received $15, and here he had received $5. I can say $6. Now tell me, do we need to report? Do Mr. X need to report this tip income? This is tip income. Employee need to report to the employer.
Mm,
Why?
No.
because it is per month per employer.
Per month per employer rule. So per month per employer. In this case, do we need to report? No, not at all. We no need to report, because from this we are getting only $15 per month, and here we have received only $6. So individually the amount is less than 20, so no need to report to the employer. So this is exam favorite one. So they will give you like $15 tip from job A, and they will give you another $15 from job B. So both are above 20. So do we need to report to the employer? So answer, you can select answer no. Okay, this is clear. This
Yes,
is
sir.
clear, guys.
Just a quick question, like
Hmm?
they are reported separately.
Hmm?
So do we need to, like, the total is more than 20, right? So do we need to report it on our income tax return?
Yeah, income tax we definitely have to pay.
So 21 we will
Yes,
report for income tax, but no FICA taxes.
correct, exactly. So
Okay,
let
okay.
me pull the number. Let me show 1040. Yeah. So in this, we will include $21 here. So $21 income we will report here. So in the on the amount we definitely have to pay income tax. So in this case we must report $21. So we keep income less than 20 and more than 20. So what is the key difference? The key difference is only FICA taxes. Income tax will remain same. We have to pay income tax for sure. If we report, then we can see the income in line 1A. Employer will give you W2, then you no need to report separately here, because employer have already included in the wages. Then we can report on line 1A. Okay.
Jay, just one more confirmation, like the example that you just gave in the Excel. In
Hmm?
that we are getting the tip income from two different employers,
Hmm?
but
Correct.
the total is more than 21. So then also we do not need to report, like need to pay FICA taxes on these.
Figure tax is not required in this case, because
Okay,
if you
because
report
these
only,
are
if
from
you, yeah,
different employers.
yes,
If it would have been from one single employer, like $21 tip from say Taj Hotel, then we would need to pay FICA
correct,
taxes.
correct, correct, exactly.
Okay, got it. Thank you. Thank
Okay. And also let's
you.
say X received $50 tip from XYZ pub, and now he missed to report to the employer. Then in that case, what we have to do? He haven't informed the same to the employer. So if the employee is not reporting tip income to the employer, then he will do any withholding for that? No, he will not pay any FICA taxes, and he will not do any withholding. If he report, then only he will do the withholding, and he will pay the FICA taxes. But if that employee is not reporting the tip income to the employer, in that case, what we can do? Definitely, it is income. We must pay income taxes. We cannot escape from paying taxes ultimately. So if IRS found these kind of things, then we have to pay interest, penalties. So a lot of things will come into picture. So it is the employee responsibility to inform to the employer. And in this case, if employee fails to report all the tip incomes to the employer, then employee what he need to do while preparing his individual income tax return, while preparing his form 1040 after year end, then in that case, what he need to do? He need to pay social security taxes and Medicare taxes. Definitely we have to pay, because that is earned income, right? So on the earned income we must have to pay FICA taxes. So in this case, let's say $50 we haven't reported to the employer, and you are preparing the form 1040. Employee is preparing his income tax return form 1040, and in that case, what we need to do, we need to report this as a tip income on the 1040. Along with that, we have to pay FICA taxes. We have to pay FICA taxes. For that, we have to attach one form called 4137, right? So 4137, when we will prepare, we have seen 8919 and 4137. Guys, getting this point? Yes or no?
Yes.
So when we will prepare 4137?
For the unreported tax tip incomes.
Okay, so unreported tip income, in that case, when this will come into picture, if the tip income more than $50, more than $20, and the employee failed to report the information to the employer, then no need to worry. While preparing his individual income tax return, while preparing his taxpayer or employee individual income tax return, in that case, we can prepare form 1040 and we can include in the income tax return, and also we can do 4137 form, and we can pay our FICA taxes. So FICA taxes, employee contribution or employer contribution?
Employer contribution.
So in this case, employee contribution only. So let's say on the $50, two contributions, right? Employee cases, employer contribution and employee contribution. So in this case, we need to pay only employee contribution only. What about employer contribution? IRS will assess the tax return, everything. If it is form 4137, IRS will automatically will calculate employer tax liability, and they will send a bill to the employer. So no need to worry. So if you miss, then no need to worry. You can pay your, your contribution, employee contribution. Employer contribution, IRS will collect from the employer end by sending tax bill after assessment, or they will send a notification. You don't need to worry. Okay, this is clear, because employer will not use 4137. So 4137 is only for employee share of FICA taxes on unreported tip income. This is clear? Yes, no, anything? Quickly, please. Guys?
Yes, sir.
Can I
Yes, right.
explain once more 4137?
Yeah, 4137. Like let's say taxpayer wages $10,000. He have received tip income of for the month, for the year, $1,000. Now, if you report, then employer will pay. The employer will do. Employer will report on the W2. He will withhold the federal income tax, and also he will do FICA taxes, which is social security taxes and Medicare taxes. He will do entire calculation, and he will withhold the amount, and he will pay employer contribution, and he will deduct employee contribution from the salary, and the balance only he will give to the employee. But what if we fail to report the tip income to the employer, then he will do the calculation on only 10,000, not on 1,000. But this 1,000 also subject to federal income tax, FICA taxes, and which is social security and Medicare, and which is FOTA taxes. So on 1,000, have we done the FICA taxes? No, right? So in that case, what we can do, the employee can report the income while preparing his individual income tax return 1040. He can report this total in the W2, we can see only 10,000. But can we see it 1,000 on the W2? No, because we haven't reported the information to the employer. In that case, this is you have to report unreported tip unreported tip income. So $1,000 we have to report here in the 1040 only, and also we have to attach 4137 form. So this is for FICA taxes. How much percentage we have to pay? 50% of the FICA taxes, like employee contribution only. The balance contribution 50% employer will do, right? But how employer will come to know? IRS will send a bill after assessing. IRS will send a bill. In this way, the tip income will work in case of unreported tip income. This is clear?
Yes.
And tip income for self-employed taxpayer, the person, he is a self-employed people and he is getting tip income. So in this case, how it will be done? So in this case, we have to include, in case of self-employment people, self-employed people, what is the schedule, guys?
Schedule yes.
Schedule C to report the total income, right? So to report the total income, we have to prepare schedule C. So this, in this we have gross receipts. So this tip income we will include in the gross receipts. That means 10,000 regular income and 1,000 tip. So that means gross receipt means total 11,000, not 1,000, 10,000. So we have to include this 1,000 tip, and total income we have to report in the schedule C, which is $11,000. And also on this we have to pay income tax, and on this we have to pay self-employment taxes. So self-employment taxes are nothing but the FICA taxes, right? This is clear? Any questions or any confusions in
Yes.
this? No, right? Okay. And also, what about non-cash tip? So we understood cash tip, we can report easily. But what about non-cash tips? So non-cash tips, I can say, usually in hotels or any, service sectors. So tip usually year-end time they will give kind of concert tickets, like as a tip. Concert tickets or any movie tickets or some any other non-cash items. One example which is concert, concert tickets. So in this case, do we need to report to the employer? No need to report. No need to report to the employer, but it is, you must report in the gross income. That means we have to pay income tax on the same. So for this we can use the fair market value, and you can pay taxes on the same. We cannot escape from paying income tax in case even it is a non-cash tip, but still it will be taxable. Okay, this is clear, guys.
Yes.
And also uh, we have understood supplemental wages, and also we have something called fringe benefits. So fringe benefits, which is also supplement, which is also in addition to the wages only. So supplemental wages definition, in addition to the wages. So in addition to the wages, usually which is cash only, but fringe benefit, this is also in addition to the wages, but it is other than cash. Many of the cases you can see fringe benefits are other than cash benefits only. Okay, so the best examples I can say fringe benefits, entertainment benefits. Some companies will give some kind of entertainment benefits, which is sporting event tickets or any concert tickets or any entertainment outings. So big fours, like if you are in the tax industry, after completion of the your tax season, many of the companies sponsor for any outing or entertainment programs. So those also entertainment benefits. So those we call it as fringe benefits, not supplemental wages. Supplemental wages usually we will get in the paycheck, and that is a kind of bonus or commission. So this fringe benefit, which is completely non-monetary, many of the cases non-monetary only. So fringe benefits usually not taxable unless unless or until specifically it is taxable. So majority of the fringe benefits are not taxable, very few only taxable. So first one, the fringe benefits I can say entertainment benefit, which is one of the fringe benefit, which is very important. And entertainment benefit, so usually if it is income to you, that means it is expenses to the payer, correct? So let's say you are working for a big four, and your big four company sponsored you one outing. So let's say the big four income $100,000, and they have sponsored some entertainment which is outing after season. So for that the expenses are 10,000. And and when we see the wages, and in this case wages, uh, this is for one employee only, let's say. So wages, we have Mr. X wages, which is which is 22,300, and also he had received this benefit, fringe benefit from the employer, right? So this fringe benefit we will include, which is $10,000, but employer cannot consider it as expenses. So usually this is an expenses, like 1,000, 100,000 minus 10,000, he will report only income of 90, but entertainment expenses are not allowed after TCJ Act. So they have made some changes, right? Out of which one changes with regards to the entertainment changes. So those are no longer deductible for the employers. Okay, guys, getting this point? Say yes, no, anything?
Yes.
Entertainment expenses are
Yes.
no longer deductible for the employers. So, but employer entertainment equal to employee taxable income. So employee here, because it is it is not expenses, and here employee is getting benefit. So employee will report it as income. This is clear. Employer entertainment equal to employee taxable income. This is clear. Yes, no, anything?
Yes, Jay.
Yes, right. And also health and recreation. So common taxable fringe benefits I will tell you. So couple of list we have. So out of which common taxable fringe benefits. So first one, health or any recreation kind of benefits, which is uh, athletic offset athletic facility or any health club membership. So those benefits usually related to the health only, but it is kind of recreation, right? So these are taxable. Any offsite athletic facility, so offsite means which is out of the premises, out of the office premises, like couple of offices having inside in the office premises itself they have athletic facilities. So those are not taxable, but offsite sorry, mm, I think there is confusion. Okay, sorry. So here offsite athletic facilities and health club memberships, so those are taxable fringe benefits only. And any tickets or any events, any tickets or any events, so those are also taxable. Any concert tickets or any athletic event tickets, so those are also taxable fringe benefits only. And also this is taxable. And also another one, this is first one related to health and recreation, health and recreation, and tickets are event, second one. And third one, employer provided life insurance. So usually in the W2 we can see there is one box, 12th box, code C. So have you ever seen this code C in the W2? Let me show you. W2 W2, this is W2 statement. Let's say we have a wages of $100,000, and also the employer providing coverage, so health coverage, the benefit coverage over 10,000 cases, so over 50, sorry. If the any employee getting coverage over 50,000, then the premiums usually, excess coverage usually will be taxable. So in that case we can see here code C. So whatever the cost employer is paying, so let's say $10,000 he's paying. So this $10,000 we can see in the 12th box, code C, which is for employer provided life insurance. So this, if you see any information here, that means $90,000 only income and $10,000 towards the employer provided life insurance. That means 90,000 income and 10,000 towards the benefit, which is fringe benefits, which is taxable fringe benefit. So when it will be taxable, if the coverage over $50,000, whatever the amount we are paying, the excess coverage is will be taxable as fringe benefit. If it is less than $50,000, then it is taxable. No. So if the coverage over, it will be taxable when the coverage coverage over 50,000, then it will be taxable benefit, right? And also what about up to $50,000? Like coverage, we understood coverage over 50,000 will be taxable benefit. What about up to 50,000 coverage value? Let's say coverage value $52,000 total. Okay, coverage value total $52,000. So in that case, how much will be taxable?
2,000 will be taxable.
So on the excess amount, $50,000, how much we have paid? So up to $50,000, whatever the premium, like usually insurance cases we have to pay premium, right? So here we are talking about coverage only, not about the premiums. So if the coverage value more than $50,000, for that case, whatever the premiums we have paid, the premium will be taxable to the excess amount only. So for the 2,000, how much amount we have paid towards the premium amount? Like $50,000 we have paid 10,000, and 1,000, and for $2,000 we have paid around $200. In this case, this $200, the premium amount the employer will pay, right? So this $200 will be taxable, so not on the up to $50,000. So up to $50,000 will be excluded. More than that, we have to see if the coverage is more than $50,000, then we have to see the excess amount over 50 towards the premium amount. So that amount only will be taxable. This is clear? Any confusion, any questions in this? No question, right? Usually, like, do you have any insurance? Guys, do you have life insurance by any chance?
Yes.
Many of you having. So insurance, like sum assured, there are two terminologies, right? Sum assured. Sum assured. So usually this is the policy amount. The policy amount, like let's say you used to take 10 lakhs. Okay. So do we need to pay 10 lakhs? If you are taking policy value 10 lakhs, do we need to pay 10 lakhs? How much you are paying?
No, only the premium
Based on
amount
yearly
every.
premium,
Premiums. So how much premium you are paying?
around 25.
Okay, $25,000. Sorry, 25,000 rupees. So this is the premium amount. So now we are talking about the premium amount. So for this, we have to see the coverage first. So if the coverage amount, that means the policy, life insurance policy amount for the specific employee more than $50,000, then on the excess amount, to whatever we have, so proportionately the premium amount we have to calculate, so that will be taxable. So we no need to do any calculations in the exam, so we no need to worry. Only the thing which we have to remember, up to $50,000 premium amount will be excluded. More than $50,000 premium amount, so more than $50,000 coverage, the premium will be taxable. That's it. Okay. And now cash and cash equivalent benefit, the fringe benefits, itself it is a non-cash, right? So but here we are getting cash and cash equivalents. The fringe benefit definition, what I told you, fringe benefits usually it is cash or non-cash, which is non-cash. So fringe benefits usually supplemental wages, which is most probably non-cash. But we are talking about cash and cash equivalent fringe benefits. So now tell me, seems to be fringe benefit or not? It is not a fringe benefit, kind of. But here, how to treat? So whatever the cash or cash equivalents we are receiving, so that definitely will be taxable. The best examples I can say, cash bonus. So like in case of Diwali or any festival, they will give you directly cash, right? So the cash bonus are obviously taxable. Or any gift cards, like any Amazon or Flipkart coupons. So those cash equivalences, right? So those are taxable only. But some exceptions we have. So some exceptions I can say, uh, occasionally some companies, in the season, in the tax season, they will provide some meal money. So these are occasional meal monies. So these are not taxable. Or this is important. Transportation fare amount some companies will pay to work beyond working hours, beyond normal hours. Beyond normal hours. So these are taxable? No, these are not taxable. So cash and cash equivalents directly taxable, and exceptions occasional mean money and transportation fare to work beyond normal hours. So those are not taxable. This is clear. And next one, transportation benefit. So this transportation benefit up monthly exclusion we have. So monthly exclusion limit $315. This you must remember. Transportation limit up to 315 per month, which is basically no need to pay any tax. So this is exclusion amount over the limit is over the limit only will be taxable. Over the limit only will be taxable. If you are getting any transportation benefit up to $315 per month, it is not at all taxable, which is exclusion, monthly exclusion limit, I can say, which is monthly exclusion limit $315. Let's say we have received, taxpayer have
Jay,
received, yeah, go ahead.
yeah, like this is the responsibility of employer, right? If
Hmm.
the transportation
Yes, yes, yes,
benefit is
yes.
exceeding, okay, okay.
Usually employer will do every calculation, we no need to worry. So employee no need to worry, like he usually will see the W2 and he will plug in the same information, that's it. But as a tax professional, we have to understand the tax laws, that's it. So because you may be tax preparer, or you may be in the accounting, maybe you can do any task, right? So ultimately we must remember, we must know all the tax laws. So preparing, like practically doing these things are different, and understanding these are different. Okay, so
Okay.
$315 employer will do the calculation. You are correct, we no need to do anything, but we have to understand for exam purpose. So after exam you can forget all these points, so no need to worry. And yeah, what about excess amount? Like let's say we have received $400 towards transportation benefit. So now tell me how much will be taxable in this. We have received, this is per month. Again, you must remember, transportation benefit exclusion per month is $315. Now we have received $400, transport benefit. So how much will be taxable in this case?
85,
How much?
$85.
$85 will be taxable because
80, because the limit is
limit is up to 300.
315.
So excess amount only will be taxable. And also we have one more important area, which is employer provided vehicles. So some companies will provide vehicle, so some companies will give vehicle to the employee. So this will be taxable only if we use for personal purpose. So if it is not for personal purpose, then it is not taxable. If it will be taxable, vehicle is used for personal purpose, then it is taxable. Other than personal purpose, which is official purpose, then it is not taxable. And another one, so vehicle cases taxable if vehicle is used for personal purposes, and non-taxable, some cases non-taxable if uh, like I can say, police cars or school buses or transit buses we have, right? So those cases, so those are, considered as qualified non-personal use. So those are also not taxable. So in case of police, police cars, school buses, or any transit buses, we cannot use those for personal purpose, right? So you are a police, okay? So you want to attend a police one function. So do you use your personal police car? Definitely, many of the cases you will not use your personal, your police car, you will use your personal car. So for personal purpose, we will definitely use our personal vehicle, because those are specifically for official duties. So in that case, uh, even though even though you may use for personal purpose, but it is not taxable because those are special vehicles, right? So like you have a function and you have only school bus, so will you use the school bus to attend the function? So no, definitely we will not use. That's the reason, even though it is a personal purpose, but IRS will, they will not consider it as personal purpose, and also it is expensive also. Transit buses, so those are non-taxable, but some vehicle it will be taxable. Other than these, the vehicles used for personal purpose always taxable. This is clear, guys? Any questions in this?
No.
No, right? And also, next important one will cover, which is mm, yeah. So we have seen taxable, right? So we have seen taxable fringe benefits. So can anyone just recollect and tell me what are the taxable fringe benefits we have seen? After that, we will go with non-taxable fringe benefits. So what is fringe benefit, guys? Fringe benefits.
Is
Any
addition.
benefit we are
In addition to
getting
the
in
in
addition to
addition to these
salary.
wages only, but what form we can say? What type? Cash or non-cash?
Non-cash.
Usually,
Non-cash.
fringe benefits means non-cash only, but supplemental wages,
Cash.
cash only. Yes.
Cash.
So that is the difference I can say. Okay. So usually fringe benefits are many of the cases non-cash, but cash we have seen, right? So cash and cash equivalents. So cash and cash equivalents always taxable. So if it is fringe benefit or supplemental wages or wages, so if it is cash, then taxable. If it is other than cash, so then it will not be taxable up to the certain limits. Like we have seen group, life insurance cases. So life insurance will be taxable. It is a fringe benefit, will be taxable if the amount over the coverage over $50,000, then only it will be taxable. And also transport benefit $315, and what we have seen, transport fringe benefit. And quickly please, anyone remember? Transport benefit, cash and cash equivalents we have seen. And this in this you have to remember the
Group
exception.
coverage.
This exception is very very important. Transport fare to work, fare to work beyond normal hours also exception. So even though it is cash, then it is not taxable because it is you know beyond normal working hours we are getting, so it is not taxable. Occasional meal money is not taxable. Regular meal money, regularly, like every month
Taxable.
you will get some specific amount regularly you will get. So will it be taxable? Regular
Yes.
meal money,
Yes,
guys,
it
say
will be
yes, no?
taxable.
Taxable because exception is only for occasional meals. So cash bonus and gift cards, taxable or non-taxable? Taxable. So cash, and
Taxable.
also uh, tickets are any event, uh, event tickets, those are also taxable. And also health and recreation. So these are also taxable. Yeah, employer provided transport. Okay. So let's see non-taxable fringe benefits. The first one, health and accident coverage. The first one in the taxable section, that is different, and here it which is different, health and accident coverage. What exactly the difference between the first one and here? First one in the taxable, which is also health and recreation, but this is not an insurance. But here we're going to see non-taxable fringe benefit, which is health and accident coverage insurance. So if the employer is providing any accident or health insurance coverage which is not taxable, what about life insurance? So see, so three differences I can say here. So which is health insurance, so health insurance and accident insurance and life insurance, and also health and recreation clubs, health and recreation clubs or memberships. So now tell me, first one, sorry, health and recreation clubs are memberships. So these are directly taxable. So we no need to check any threshold for this. So because this is something called membership, right? So this is additional facilities actually, not by the employer. So these are taxable straight away. Life insurance. So this is fringe benefit only. So this will be taxable only if the coverage over 50,000, then only it will be taxable. And also accident and health insurance, this will not be taxable, not taxable. This is also this is one of the non-taxable fringe benefit. So this is taxable fringe benefit or non-taxable fringe benefits. These two, guys, these two are taxable fringe benefit or non-taxable. Taxable fringe benefits, right? Taxable fringe benefits. But these two are non-taxable fringe benefits. So in India also we had fringe benefit tax previously we had for employees. So I think now no fringe benefit. I think no fringe benefit tax in India. Okay. So next one, health insurance and accident insurance. So is it taxable or not?
Not taxable.
Not taxable.
Not
So
taxable.
and also retirement plans. So if taxpayer, if the employer is contributing anything to the employee towards the retirement plan, so this is not at all taxable. Employer contribution to qualified retirement plans are not taxable. And when it will be taxable? So let's say employer, we have one XYZ LLC, and we have Mr. X employee, and they had a retirement plan. Retirement plan, which is a 401k plan. For now, just understand 401k plan, which is like a provident fund in India. Okay, and we have a qualified retirement plan now. Employer have contributed to this qualified retirement plan 401k, which is 10,000, and also employee also contributed to the retirement plan, which is $10,000. Now this employer contribution to the qualified retirement plan, which is not taxable when they actually made, but tax is paid later when employee takes the distribution from the amount. This is because this amount will sit in the retirement account, right? So when the employer made contribution, then it is not taxable. When the employee distribute the money from the retirement plan, then only it will be taxable. So usually contributions made to the plan, taxable or non-taxable? Non-taxable. But when it will be taxable? Like it is, think about your bank account. Employer had given some money in your, like employee had transferred some money in your bank account. So in this case, it is a retirement plan. Like you have HDFC Bank, so that is a retirement plan account only. So in that case, whatever the amount employer contribution, that will not be taxable at the time of contribution. But when you withdraw the money from your HDFC retirement plan account, then it will be taxable. Okay, so tax paid when it will be taxable. When taxpayer takes distribution, then it will be taxable. This is clear, guys? Any questions or
Yes.
any confusion in this? So that means no, it is not subject to any income tax, but still it is subject to FICA taxes. Let's say employer is giving you salary of $90,000 salary to the taxpayer wages, and also he is providing you 401k, which is a retirement plan. So this amount will be helpful to the taxpayer when he withdraw the money. So for under 401k plan, he had provided 10,000. Now tell me how much we need to pay income tax on this. Do we need to pay on 90 or on 10 or $100,000? So what is the net benefit we have received from the employer, guys? What is the net benefit we have received from the employer? 90, 10, 100.
$100,000.
$100,000. So but in this, how much will be taxable immediately? Now,
90.
now
90,000.
you can see here, this is W2, this is the statement. Okay, so you can see 90,000 here. Okay, on this you can see taxes here of 9,000. And now here is the important point. So you can see this is social security wages, and this is social security tax withheld, and this is Medicare tax withheld. So what are these numbers? This is box W, this is W2 form. In this we have 20 boxes. Okay, and in this you will be reporting, employer will report $100,000 here. That means employer contribution towards a retirement plan will be subject to FICA taxes, but it is not subject to income tax. So in this we have to pay 6,200, which is social security taxes, and on this we have to pay 1.45, right? 1450. This is 1.45 percentage of the Medicare taxes. And also you can see the here we have 12A. So here we have code D, which is 10,000. So in this way we can see the numbers. Guys, getting these differences? Yes, no,
Yes.
anything? So with this, what we understood, employer contribution towards the retirement plan is not subject to income tax, but it is still subject to social security and Medicare taxes. Like if you are working practically, you might be seeing this W2. So many of the cases you will see the difference. If you have code W, in your 12th box, then you can see the difference. So because the difference is because this employer contribution towards retirement plan, which is subject to FICA, but it is not subject to income tax. So that's the reason we can see this difference. This is clear. So with this, what we can conclude, so employer contribution will be subject to income tax or not? This is subject to income tax or not?
No, not.
No,
No. What about FICA?
not taxable.
Subject to
For
FICA
FICA
tax.
is
Yes,
taxable.
subject to FICA taxes. So on this, so we have to pay FICA taxes on whole $100,000. And this is exam favorite one, IRS favorite one, because um, whenever there is a special provision, then IRS will focus on the special provision. Regular, everyone can read, everyone can remember regular, that is for sure. But whenever there is exceptional, make sure to focus on the exceptional point. We have seen one more exceptional point in case of cash and cash equivalents. This is IRS favorite area, so they definitely will test on the question on on the cash and cash equivalents. And also the remaining are easy, like straight away by seeing we can see. But whenever there is an exception, make sure to focus, make sure to read or write twice or thrice, so that will be helpful. And next one we can see cafeteria plans. So cafeteria plan, this is we can see in case of employment. So for this we have a special section 1245. So section number, do we need to remember? No, it is not at all required. Section 125, plan, which are plans, I can say. So which means employee can choose. So cafeteria plan means employee have two options. He can choose, you know, I can say, uh, okay. So cafeteria plans means employee, he can choose, he can choose at least, so in the whatever the benefits we have, so in this benefit at least one taxable benefit, and one or more qualified non-taxable benefits. So if we have any these kind of options, if employee have these kind of options to choose, then we call it as cafeteria plan. For that, what is the provision we have? Section 125 plan. So why I'm telling sections, because these are not required, but at least you can at least if you see any word in the exam question 1 to 5, you no need to worry. So that is related to the cafeteria plan. So they will try to manipulate your mind, but no need to worry. Even though if they're giving section numbers and all, you no need to worry. If you can remember the provision, then it is highly enough. And in this case, employee can choose at least one taxable benefit and one or more qualified non-taxable benefit. If you have this kind of option in your pay stub or paycheck, then it is a cafeteria plan. Okay. So many of the case. So when a plan is taxable, when any plan which includes cash, then it is taxable. So that means here in the taxable benefit case, which includes cash or cash equivalence, then it is a taxable cash equivalence. So non-taxable benefits. So can anyone tell me what are the non-taxable benefits we have seen? Non-taxable benefits. Guess you. No one remember.
Health and
Non-taxable.
accident insurance.
Sorry.
Health and tax.
Yes.
Health and health
Medical,
insurance.
dental, and vision insurance. So yeah, medical, dental, vision insurance, everything is comes under one roof only. And um and also we have other couple of things. Okay, so let's move on to flexible spending account, sorry, arrangements, which is FSA. So FSA, like we have HSA. Likewise, we have FSA. So FSA, which is a prior version to the HSA, like which is advanced version we have, which is HSA, health savings account. So this is flexible spending arrangement account. So this is like kind of account only. Um, you know, this is one of the type of cafeteria plan. So in this, what are the options available? So how this will work, we will see one by one. This is, think about like it is an account, like in our accounts, like SBI or HDFC, whatever the accounts we have, it is like say FSA also, it is like an account only. So in this account, like, do you have NPS? Are you contributing anything relating to your pension scheme, national pension scheme, NPS? No one.
No.
So if no, then please focus on your retirement. So whatever the income you're earning, that is fine. But after retirement, no one will give you money. So focus on your retirement. And if you have health insurance and all, fine. If you don't have health insurance, make sure to take health insurance and also keep your money in some investment. Like why I'm telling you, because after some period you may not having source of some source of income, so at that point these savings will be definitely will be helpful. There is a saying in investment, like the saying, usually income minus savings equal to expenses. So that is the saying actually. So this we can see in case of stock market expenses. So this is usually saying, if you invest your money, so first whatever the income you are getting, keep on this, you just take savings immediately, so then you can use the amount for expenses. So make sure to keep some funds in the stock markets and keep some money in the gold somewhere. So definitely those will be helpful for emergency needs and all. So this is one of the FSA account. So why this, what is the use of the FSA, which is related to healthcare, which is related to health care account. uh, Healthcare means which is for medical purpose, medical expenses. So if the employee want to contribute or employer want to give some benefit to the employee, the maximum amount we can contribute towards this FSA account, which is maximum amount $3,200 only. And if employer or employee total contribution exceeded more than the limit, you cannot do that. So the maximum cap limit is 3,200 only. We cannot contribute. If you are trying to contribute, then they will not accept, because they will tell you you have the limit of 3,200 only, you cannot contribute more than this. Definitely they will tell you, the account holder, when we open the account, they will specifically mention and all the key points, everything. So they will not take more than this, definitely. And key rule here is, if you use it this is for medical purpose only, right? So if you use it, then use it. If you don't use it, then you will lose it. So the key here is use use it or lose it. So that is the terminology or key factor we can see in the FSA account. And like that means in 2024 you have in 2024 you have kept $3,000 towards the FSA account. So that means which is a benefit, actually fringe benefit. That means it will not be taxable. So that's the reason, if employer is keeping some money in the FSA, in your FSA account, then it is not taxable, because it is a non-taxable fringe benefit, right? So that is a benefit. If you are using for medical purpose, then fine. If you are not using, then you will lose it. That's it. So like, let's say employer had kept money $3,000 in the FSA account and you are not using, then what will happen? That means you will lose the money. And that's the reason IRS had given option to you, which is 2.5 months extension time. So that means after year end, which is 2024, that means 2.5 months means till next 2025 March 15th. So till that period, if you have any medical emergencies, you can use the money. If you don't use it, then you will lose the money. This is clear, guys. So how many months we have grace period? Grace period
2.5.
2.5. Use it. What is the caption for healthcare FSA? HCFSA.
U-
What is the caption, guys?
Use it or lose
Use
it.
it or lose it.
Who will lose? You will lose, or employer will lose? If you
Taxpayer.
taxpayer will lose, that means usually unused amounts generally, forfeited by the employer only. So because this is kind of set up by the employer, right? So the employer will forfeit the money, so he will take back the money. And also you have one more option. So the one more option, if some cases if employer allows only, we can carry over the amount. We can carry over to the next year, which is 20% of the annual limit. We can carry over the amount. If you are not using, you can carry over up to 20%. That means, like, let's say we have 3,200 in 2020 in your FSA balance, 3,200 you have in 2024, and uh, you haven't used the money. Now you can carry over some portion to next year, which is how much percentage? Which is 20%. That means the maximum carryover to the next year for 2024, how much we can carry over? So which is $640 we can carry over to the next year. So in this case, employer can choose. Employers, basically this is employer choice only, not employee choose. So here employer can choose grace period, or employer will give you carry option, but not both. So either you can use grace period, the employer will decide grace period or carry over. So grace period we have seen. So what is grace period? You can use the money in next year within 2.5 months after the year end. So this is one option. So this we call it as grace period. The next one we have carry over. How much we can carry over? 20% of the 24% of the annual limit, which is 640. So either grace period or carryover, but not both. This is also
So
very important.
Jay,
Yeah,
the taxpayer needs to use this FS amount in FSA year wise, right?
correct. Because use it or lose it, right?
Okay.
Ba- s- Regular option, we definitely will get the first option, which is 2.5 months grace period. Some cases, if employer allows, then you can carry over. If employer allows only, if you don't use it, then employer will forfeit the money. Employer will take back his money. So you have two options. One is grace period, or you have carry over option, but not both. Okay.
So if employer don't allow, then
Which
this
means
FSA account
Yeah,
amounts
he
will
will
not
forfeit.
get accumulated, right?
Correct.
so if the
Okay.
employee doesn't use it for the by March 15,
Hmm?
so 6 lakh, so $640 is carried over for
No, yeah, that is
2020.
what I told you. So grace period, either you have grace period or carryover, but not both options. So this is first option. The first option, simple one, grace period only. But some employers will provide an another option, additional option. This is additional option. This is option of the employer. If employer feels that, if he want to give any additional, like, concerns or something, then only he will give this option, because this is handled by the employer only, right? So FSA account, actually, if the forfeiture thing will be done by the employer only. So that's the reason some employers will give you this option. So okay, you no need to worry. So you can carry over 20% to the next year. So that option will be given by the employer. So either grace period or carryover. So carryover option of the employer. So default one 2.3 2.5 months grace period only. But if employer feels that he want to give some grace period, he want to give some other additional option, that is carryover option. So if the employer is willing to give the carryover option, he can give only carryover option, but he should not give grace period again, because this is giving this carryover is a additional benefit. So why he will give grace period? He definitely will not give grace period for you. Either
So
grace period or
so if carryover the employer has given, so for
hmm,
next year the employee will have 3,200 plus 640 to
correct,
utilize.
correct.
Okay. So from exam point of view, what question can we get here for FF?
Exam point of view, yeah, this one grace period or carryover kind of things we can see, or else they will give you, they will ask you how much, FSA quote the maximum amount we can contribute.
That is 3,200.
Yeah, and also they will test on use it or lose it. So what will happen if you are not using the health FSA account money, which is for if you are unable to use the money, then what will happen? So in that case, the employer will forfeit the money back.
Okay. Okay.
That's it. Simple question only we can see. And next one, dependent care FSA. This is also FSA, which is flexible spending arrangement account. So this is for first one for healthcare purpose. This is for healthcare purpose. FSA means flexible spending arrangement. So this is for healthcare purpose. Second one for dependent care purpose. Dependent care FSA. So dependent care means taxpayer having dependents for care, for that dependent care purpose. We can have this FSA account, which is flexible spending arrangement account. So uh, this is specifically for dependent care purpose. So used to pay for any child child daycare, or before and after school programs. Before and after school programs. Why before and after school programs? Adult care for disabled dependents. So before and after school, which is daycare only. So if it is school, then it is not a daycare. So before or after school program, some daycares will be there, because if the dependent is in the care facility, then the taxpayer can work, without any, problem, right? So that's the reason. If it is child daycare or any before or after, school programs or adult care disabled purpose, so these kind of facilities, these kind of care purpose, we can keep some money in the FSA, which we also call it as DCFSA. So above one, HCFSA. We have seen HCFSA, which is healthcare FSA. This one, dependent care FSA, which is DCFSA. Now what about the limits? The limit for DCFSA, $5,000 for single taxpayers, or MFJ taxpayers. That means MFJ or single or HOH or QSS, then 5,000. And if you are filing which is QSS filings, sorry, if you are filing MFS, then only 25, because MFS cases two tax returns will be filed, right? One for taxpayer and the one for spouse. So total together 2,500 only will come. So that's the reason MFS case only 2,500. Important rule here. Uh, um, so in this case, usually the reimbursement will be given. So reimbursement amount should be limited to what actually we have contributed. Some cases, we can first pay the expenses, and we can get the reimbursement from the DCFSA account. So in that case, reimbursement are limited to the how much you have actually contributed. You cannot be reimbursed more than the in what is there in your account. Like let's say in 2024, you have some DCFSA account balance, which is $2,000, and daycare expenses uh $5,000. And in that case, employer will do the reimbursement. Instead of contributing to DCFSA, they will give you reimbursement. So they can get some money from DCFSA, which is 2000, and employer have reimbursed the amount. So in that case, how much will be uh, in this case, how much will be taxable and how much will not be taxable? This amount will not be taxable, and this reimbursement will be taxable because we have balance of 2000 only in the DCFSA account, right? So this is another point we can see in the DCFSA. And also we can understand one more important point, which is adoption assistance program. So with this we will conclude for today. I think we are running late. Okay. Next one, yeah, adoption assistance in a cafeteria plan. So cafeteria plan, which means section 1 to 5, adoption assistance. So this is under cafeteria plan only. And this adoption assistance program, so usually maximum income exclusion for this adoption assistance, which is 16,810. So in this, what we have to remember, adoption assistance exclusion amount $16,810, and this is per child. This is per child, and any amount over the specific amount, over the limit, then it will be taxable. Over the limit, then it will be taxable income. And these are the important part we have to remember. And this is excluded from the income tax. Excluded from the income tax, but not excluded from the FICA taxes. So FICA taxes, is it excluded? No, only exclusion from the income tax. So, but still we have to pay FICA taxes on the adoption assistance. So if taxpayer is getting any adoption assistance from the employer, so then up to $1,608, which is excluded. So on this we no need to pay any taxes. This is per child based, so not the overall limit. Okay, this is clear. So for this, we can see W2 code T. So have you ever seen code T in the W2? So W2 we have seen one code, which is D code. D code for 401k plan. We have just now seen, right? 401k plan. So T code for adoption assistance in the W2 adoption assistance, box number 12. And C code for, anyone remember C code? Life insurance. In the W2, we can see these, fringe benefits indirectly, not on the total income side. So we can see the breakup in the W2 box 12. So T code for adoption assistant, D code for 401k, C code for life insurance more than coverage value more than 50,
50,000.
and
50,000.
adoption assistance more than
$16,810.
401k.
10,000.
No, 10,000 is the example on 401k. We have thresholds. Let me tell you tomorrow. I think I forgot the numbers. Okay, so that we will see, but not required for paper 1. So paper 2 it is required. And also we have one more point, which is highly compensated employee. If you have time, something, just read about highly compensated employee. So we have company officer and 5% are greater owner case we have, and other cases like earning, based on the earned income also we can consider the person as highly compensated employee. Our spouse or any dependent also highly compensated employee. So those we have. So if you have time or something, then quickly have a glance on the highly compensated employee. And we have very important topic in the unit 4, which is clergy. So taxation of clergy. So that we will see, but I don't think so I can cover highly compensated employee. This is also important, but just have a glance. So no technical stuff. So just that what are the key important, like what are the key points to consider the person as highly compensated employee? Make sure to see. So we have $150,000 income test or ownership test we have. So which is 5% of the owner. And also there are two persons. One is highly compensated employee, and the one key employee. So there are two differences. So just have a glance on the highly compensated employee and key employee. So this is also very exam favorite only, but because of time constraint, I may not be able to take, or else if you want, I will summarize and I will explain you in a quick glance. So you must focus on highly compensated and key employee as well. Okay. So tomorrow we will cover which is clergy, taxation of clergy, and one more topic is there. So with that, we will try to complete unit 4 by tomorrow, and we will quickly start with unit number. Tomorrow we will start premium tax credit and additional Medicare taxes. Tomorrow, if you have time or something today, just see premium tax credit and um, premium tax credit and one moment. AC, yeah. So unit 14 and unit 15 will start with unit 14 tomorrow. Premium tax credit, because nowadays they're testing many questions on the premium tax credit and additional Medicare taxes. So because we have just like we have discussed the same topic like which is Social Security and Medicare, additional Medicare taxes, right? So those taxes again we can see in the unit 15. So that's the reason we can immediately start with unit 14 and 15 tomorrow. So with that we can uh, if you have time or something, just have a glance. Just try to see what exactly the AC and premium tax credit. Then we will. Um, it will take 1.5 hour tomorrow. So simple topic only. Okay, then we'll try to complete this unit 4 by tomorrow, and we'll start with fresh unit tomorrow. Okay, guys. Do you have any questions for me?